Thank you everyone for joining us for this live webinar on Bollinger Trading. So this is Stephen Ong, your presenter for tonight. So we'll be starting the session proper at about 7 p.m. So meanwhile, we'll just give some time for a few attendees who's about to join us. And for those who are already signed in, right, please pick up your handphone and scan the QR codes to sign up for more future webinars or for the MT5 demo accounts and also trial out our MT5 trading account. This is our most advanced trading platform available in Singapore. And so while we're still waiting for the rest of the attendees to join us, please read through the disclaimer statements and I will speak to you at 7 p.m. Right. Once again, good evening, everybody. Thank you again for joining our live webinar on the MD5 Bollinger Trading. And this is Stephen Ong, your speaker for tonight's session. So I'm Senior Account Executive with Phillip Futures and a Phillip Investment Specialist with Phillip Securities. So before I begin, I'd just like to do a sound check. So if you can hear me loud and clear, just type yes in the question box. Right. So also during the seminar, if you have any questions regarding this presentation about MT5, about Phillip Futures, please type them into the question box and I'll answer them during the Q&A session at the end of the webinar. Okay. So awesome. So let's see. Everybody seems to be able to hear me clearly. So let's begin our webinar tonight proper. Hi, good evening everybody to those who just joined us. Right, once again, I'd like to thank everybody for taking time off from your busy schedule to attend this webinar. So for those who just joined in, so I'm Stephen Ong, so your speaker for tonight webinar session, and I'm delighted to share with you a topic which I'm passionate about, that is trading the stock CFD Forex commodities market with the Bollinger trading strategy using the MetaTrader 5 platform, right? In short, MT5. So for those who are new to trading, Phillip Futures is the first company to introduce MT5 to traders in Singapore. And not only MT5 is the most advanced trading platform available in Singapore, it is also completely free to use with zero commission transaction costs and amazing functionality and features. So MT5 is not only the most advanced and sophisticated and user-friendly trading platform ever introduced in Singapore, it is also the best trading platform ever conceived and especially designed for retail traders. So it's absolutely free to use, no platform fee, no data fee, and most importantly, is zero commission. So what are you waiting for, right? So pick up a handphone and scan our QR code to download a free copy of this MT5 platform from our website and try out our training platform after this session. So hopefully at the end of this webinar, we are able to start on a win-win business partnership and hopefully can share many successful trading stories to come. Okay, just a brief intro about myself, right? For those who are just joining, my name is Stephen Ong again, right? I'm a stock and Forex account executive with Phillip Capital. So I've been awarded for contributions over the years as a CFD specialist with Phillip. So I've been also been invited by SGX to share my knowledge, expertise about investment and trading with these investors. So tonight my goal is very straightforward. That is to assist traders like you who are interested in developing solid trading strategy suitable to your trading interests, your risk tolerance, and your resources. So I'll remaining flexible enough to capitalize on the market opportunities when they arise. So I hope to provide traders and all the listeners in this webinar with the market news in a timely fashion so that when the opportunities arise, traders are able to capitalize and realize their financial objective while effectively managing their risk. Right, so I want to equip traders and all the audience listening in with the benefit from my experience and knowledge and enthusiasm in trading this Forex and futures and this CFD. Right, so with this working relationship we develop, we have a better understanding of the principles, factors, the events that affect the markets. Right, so for traders who like to embark on this trading journey with me, right, do remember to scan your QR code right on the slide right at the end of this session so that we're able to start on this win-win business partnership and share many successful trading stories to come. Right, so the proceeding for tonight's session will be as follows. Okay, so the first part of the webinar, I'll be covering on the basics of trading. Right, basically it's just an introduction on trading, what about the characteristic and features of trading and how traders identify trading trends and the different types of market conditions affecting uh, the types of trading strategies that traders will apply. So after which we'll go through the main topic of the night, and that is the Bollinger trading strategy. Right, so briefly I'll touch on how to use the Bollinger trading techniques to analyze and to identify entry, exit signals, and how to use uh, Bollinger concepts and trading principle, which are essential for traders that uses this Bollinger Bands trading. Right, and I'll cover the process that is required for successful Bollinger trading, and so that traders can utilize this strategy in the trading. Right. So some of the things I cover will be like how to buy low and sell high, and how to use this Bollinger Band to forecast market when the anticipate the market may break out, and to trade with this Bollinger Band in the trending market. And thirdly, if time permits, I will do a demonstration using the MetaTrader 5 platform on how to use MT5, right? How to submit the types of order in the platform, and how to recharge and set all the indicators and templates. And last but not least, I'll try to answer all the questions that you have in the Q&A session. So do remember to type in your question into the question box. And in the event if I not able to answer a question, I will try to reply your question by email by tomorrow. Right, so this is the first session for tonight. So introduction to trading. In this part of the webinar, I'll cover on how traders can navigate the market and how traders can engage the different types of market that he or she is actively trading. So as the saying goes, the trend is your friend. So all traders know that it's not easy to correctly determine the prevailing trend and act accordingly. So experienced traders know that finding a strong trend and trading in the trend direction has the potential to lead to a higher probability trades and successful trades. So the first question that trader is trading, they need to ask themselves is the market trending or is it ranging? So as you can see from this simple chart here is that market trend up and then it ranges and then it trend again. So market rises, right, stuck in the range, right, it's sideways for a while and then continue to rise higher on the third part of the on the slide, right? So you see the market can trend up, range, and then trend up again, right? So for traders, they need to identify this kind of condition before they trade. So it's either markets trending or markets in the range bound. So these are two major types of market conditions that trader needs to be familiar with, right? So of course, this is just a sample. The trend is that market can change an instant from uptrend range and it could be a downtrend, right? Or it can remain range for a long while, right? So these are the conditions that for those on new need to be familiar with. And then once the market condition and prevailing trend is determined, traders, the next step for traders to do is to implement the appropriate trading strategies. Right, so for this case, right, we will touch on the main topic later on using the Bollinger Bands to trade on these two different types of market conditions. Right, so after which, when the trend is determined, traders need to ask themselves if the market is exhibiting signs of trend. So how do we know if the market is in an uptrend? Right, so this is how traders determine a trend. So the question is, what is a trend? Right, so this in a very simplified definition, right? An uptrend is determined when there's a series of higher highs, right? So as shown here on the left side of the screen, right, there's a series of two high highs and higher lows to form this uptrending market, right? So this right side of the screen, you can see here, this uptrend is formed and there's two HH form, which is denoted by high highs, and two HL, which is a higher low and higher low. So when you see at least two of these high high, high lows form on the appreciating asset prices, then you can see that the market is on an uptrend. Okay. So the same thing applies for downtrend. So downtrend is formed and there's a series of low prices. So this happens when the market pull back, right, from a rally, and you form this lower low and lower highs. So you need at least two lower lows and two lower highs, right? As you see on the right side of the screen here, two low and lower highs, right, for the downtrend to be considered a downtrend. Okay. So for traders who use Bollinger Bands trading, they can use these indicators to take advantage of this market rally on the left side of the screen, and also a market falls and market pullback, right? They can use this Bollinger Band, right, to capitalize on this downtrend. Right, so later I'll go into more details how to use Bollinger Band in the trending market. Right, so next I'll touch on the ranging market. So how does the ranging market looks like? Right, so I believe to those who are trading, you will be familiar how the market looks like. So a market range, right, occurs when prices move sideways. Right, so for those who are more experienced, right, this is very similar to channel trading. Right, so this channel ranging market, right, it tends to see the action bounce between support and resistance, and trade within this support resistance zone, as you can see on this chart. Right, so for market ranging, right, the traders need to determine the support and resistance zone on the chart. So as you can see here, right, the support is the yellow zone, sorry, the green zone, which is you see here right here. We provided a support for this price action, and the price did not go below the support area. And then for the red zone, which is the resistance zone, right, there's the prices tried 2 times to go above, and then finally, right on the right side, top right corner of the screen, right, you can see the prices broke above, and then prices went higher. Right, so before the break higher, right, the price action you can see here, this is a ranging market. Markets goes up to the red area and then fall back to the green zone, and then goes up to the red area, go back to the green zone, and goes up and down. So this is what I call ranging or sideways markets, right? So market trade between these points. So these are the basis and the basic for range trading strategies, right? And traders usually mark on the chart, right? On this chart, find this resistance area and the support area before they take further action, like what price to buy and what price to sell. So they need to know the area of the price, resistance area and the support area. So as long as this range holds, right, traders can take a very neutral market stance, right? So this means a trader can look at both the long position near the level of support, and maybe to take resistance level as a level possible whereby they can take a short positions. Okay, so with Bollinger Bands, right, the traders can apply this kind of trading in the ranging market, right? So this is the versatility of this Bollinger Band, right? So this is the very ranging market, so it's a very simple definition of it. So hopefully you have a clearer understanding of how a ranging market looks like. Right, so as an industry veteran Forex broker, I understand that finding the right Forex strategy can be tough, so especially for new traders. So I usually get questions from new clients. They always ask me like, where do I start? How do I know what I found, if I found the right trading strategies? So considering the hundreds, if not thousands of different variations of trading strategies in the world, right, things could get worse. So you could add these different endless numbers of technical indicators. So it gets complicated, and especially may get very confusing for new traders. Right, so basically tonight's session is to introduce both experienced and new traders, like one of the most popular trading style, which is the Bollinger Band trading strategy. Right, so a quick intro to the Bollinger Band. Right, this is a versatile trading analysis indicator. So it's widely used among traders, and can be used for different asset class. Could be stocks, CFDs, Forex, futures, etc., etc. So the inventor for this indicator is Mr. John Bollinger. So he developed this indicator in the 1980s. Right, so the purpose of this is to find relative highs and lows in the moving markets. Right, so this tool will help traders to find potential overbought and oversold area or zone. Right, so this will identify the level of volatility of market that the traders is trading. So as you can see on this chart, the Bollinger Band consists of one line in the center and 2 price channel bands above and below the center line, right, seen on this chart, right? So this middle line is the moving averages, right, and this by default is set as a 20 period simple moving averages, whereas the upper band and the lower bands are calculated about 2 standard deviation from the center. Okay, so however, there'll be some market extreme volatility, so that may require different parameters. So traders can adjust this parameter based on these conditions. So for a more volatile market, they may want to increase the standard deviation to 3 or 4, right? So this is to to find a better support resistance level or for entry or exit levels. Okay, so there are some pointers that traders to take note of is that the volatility for this case for Bollinger Band is based on standard deviation. So it changes as the volatility increases and it decreases. So the Bollinger Band will widen when the volatility increases and it will narrow when the volatility decreases. Okay, so this is the one of the key features of Bollinger Bands that traders need to take note of. So for those who are more interested about how to derive the calculation of the Bollinger Band, these are the formulas. Right, so one thing to know of this is that the Bollinger Band indicator is available for free on the MT5 platform. So we can just click on the toolbox and apply the Bollinger Band straight away. So you don't have to do the calculation manually or to do this on a computer. Right. So, but then just keep in mind that how this formula works and what is the purpose, right? Especially the standard deviation of 2, right? So on the indicators we'll show later in the demonstration, you can adjust accordingly whether you want to set at 2, at 3, 4, or more, right? Depending on how you want to apply your trading strategies. So more importantly about this Bollinger Band is that traders need to understand the whole functionality of Bollinger Band and how to apply this to the different market conditions. Right, so this is another chart, and just to show you how the 3 lines look like and interact with the market actions. Right, and just to reiterate the 3 lines, the importance of this 3 line, which forms the backbone of this Bollinger Band trading strategy. Right, this is the lower band, right? Lower band followed by the upper band and the middle band. Right, so you can see that the price action, right, for about 99% of the time, you will trade within the Bollinger Band actions, right? So you either touches lower band and then market recovers to the upper band and follows on the downtrend. It will ride on the downtrend, right on the lower band. Okay, so this is the Bollinger Band trading. So the 3 line itself serve a different function, right? So the upper Bollinger Band will somehow act as the resistance level, and the lower Bollinger Band will act as a support level, right, for the different price action. So by default, right, I will usually use the default setting, which is a 20 period moving averages and the 2 standard deviation for the upper and lower bands. Okay, so for those who are more active traders, they can maybe change the simple moving average to exponential or some other parameters they are comfortable with. Right, so this is the Bollinger trading. Right, so next I'll just briefly go through what is standard deviation, right? How to use this as a trader and how you can apply this onto the Bollinger Band trading. Right, so it's for those who are more statistically inclined, right? So standard deviation basically measure how far the indicators are away from the averages. So for this case, for the Bollinger Bands, it measures how far away it is from the 20 period moving averages. So in this example, you can see that for prices that are near the upper Bollinger Band, they are considered expensive, right? So they are trading at a premium, right? So these are the interpretations for this upper Bollinger Band. So prices that trade near the upper band are considered, at the time frame that trader is looking at, is considered as premium prices, or it could be a very expensive prices. Okay, so for prices that trade below, right, for those who are familiar with, right, these are what they call prices are considered traded at a cheaper price, right, or is trading at a discounted price compared to the premium price or compared to the moving averages prices. Okay, so these are the interpretation of the moving averages. So for those, right, some of you may be thinking right now, so can I take a short position at the expensive band or at the premium band, and maybe I can take a long position at the discounted band or short band? Well, some traders, they do apply this kind of very straightforward strategies, but this strategy will only work in a very ranging market, right? And it will not work in a trending market. Okay, so for now, for you can see here, right, for most part of this chart is about 80% of this chart, the center here, market is in the ranging market. So traders may sell short here and then buy back here, turn long, take profit at the top, then sell again, take profit below. Okay, but then when the market breaks below and trend lower, that's when they stop using this strategy. Okay, so this is a very straightforward ranging strategy for Bollinger Band. Okay, so as a rule of thumb for Bollinger Band traders, prices are deemed overbought on the upside when they touch the upper band and oversold on the downside when the prices reach the lower band, as I mentioned earlier. Okay, so as the prices oscillate between the upper and lower bands of the price action, so the Bollinger Band will become an excellent tool for traders to gauge the volatility, right? Not just to find entry and selling signal, right? Not just to find the entry or exit signal, but to gauge the volatility. So you can see from this part of the chart here, I can see that the volatility is quite low because prices is trading between the upper and lower band. Right, prices touches higher band and then fell and then recovers, try to go above the higher band, but then it fell and then it pull back again. Right, so this is a ranging market or solid market, and volatility is quite low because the price action is stuck in between these two band itself. Okay, so this is the low volatility market or quiet market. So you can see that when the price is quiet, the bands are close together, and the price action is confined within the upper and the lower market Bollinger Band. Okay. So likewise, when the market gets volatile and the buyers come in, right, volumes picks up, Bollinger Band will expand, the price action will rise. Prices, in an uptrend, remember that the uptrend market is defined when there's a series of high and high lows, right? So you can see that market pulls up, breaks above the resistance over here. This is a green candlestick, right? It's a confirmation that prices rally and continue to rise. So it's a series of high, prices make a small pullback and then rally up, and then consolidate for a while and then pull up, and then So this is a very simple, straightforward trending up in a bull market. All right, so you can see that this is a market volatility picks up. So when that happens, you can see the comparison of the low volatility market Bollinger Band, the high volatility market Bollinger Band. Right, the difference now you can see is very obvious that the candlestick, right, sticks close to the uptrend when the market is rising, especially in a bull market. Right, you stick together. This is what the Bollinger Band trader call the riding the uptrend, right, riding the market, right, or walking on the uptrend. So market is very close to the upper band. You see that there's a big space, right? The gap between the candlesticks and the lower band is very wide compared to the quiet market, right? At the shown here on this chart on the left side. Right, so you can see that when the volatilities pick up, right, the prices move out, the band will spread apart, right? So this is a signal to the trader volatility has picked up, and market may trend and continue to trend until the volatility dies out and the market becomes quiet. Okay, so this is the difference between the quiet market and the volatile market. Okay. Right, so here's another example to just to illustrate to you how volatility looks like in a changing market, right? So because market changes from a low volatility, right, into a high volatility market, right? So you can see that in a low volatility market, the candlesticks is in between the low and upper band, and once the volatility picks up, you can see that the candlesticks sticks to the lower band and then is far away from the upper band, right? So you can see comparison, right? Low volatility and the higher volatility markets, the main difference is the widening of the spread of the Bollinger Bands, right? So this is one thing that for new traders just need to be aware of and take note of. So you can see that when from a downtrend and then the high volatility continue and the market reverse and become uptrend here, and you can see that the candlestick it rides on the upper band, and you can see that the spread is very wide as compared to low volatility, right? And then when the volatility dies down, you're right, it comes to low volatility, you can see that the bands narrows, right? The market actions is stuck between the upper and lower band, right? So market is dynamic and it's changing. So from this illustration, you can see that from low volatility to high volatility, how the Bollinger Band behaves and how it interacts with the price action, right? What does the Bollinger Band tells the trader? So for those who are more active trader, they thrive on high volatility market. They try to act on the high volatility market condition, whereas in a low volatility condition, they will try to avoid taking any position when the market breaks above, and he'll take a higher positions on the higher volatility. Right. So for new traders, right, it could be difficult to identify just by your naked eye, right, how volatile the market is. So with the Bollinger Band trader can use this indicator to make sense of the market. Right, so this is where the Bollinger Band comes in handy as it shows the contraction in a low volatility market and the expansion when the market gets very volatile. You can see this illustration from low to high and then from low to high again. Right, so that traders can apply the appropriate trading strategy so that you take advantage of this kind of volatility in the market. Okay, so in this chart, we'll show how the market behave in a downtrend. Right, so in this downtrend, remember the definition of downtrend is a series of low, low, and low high. So at least two low, low, and two low high. Right, so this will give a downtrend. So you can see the market fell, recover to low high, and then fell again and low high. So you have a series of low, low, and low highs, and then prices fell. Right. So in the Bollinger Band, so you can see the red line above this is the upper Bollinger Band, lower green line, this is the lower Bollinger Band. Okay. So the upper Bollinger Band, this illustration is seen as a gauge of resistance. So they provide the resistance area whereby the prices fail to recover or rise any higher above that. So you can see here on the chart itself that they tried about 4 times to break above this resistance level. So for this case itself, for those who are more aggressive traders, they'll use this as a trend trading strategy for Bollinger downtrend and use the failure to break the resistance level as the possible entry level to take short positions. So these 4 points are a possible entry level that for shorters to take a short position in this. Okay, so this is the strategy that is applicable for both the uptrend and downtrends, but for this illustration, it's more on a downtrend, using the upper Bollinger Band to take short position when markets on a downtrend basis. Right, so traders can determine the profit-taking levels from either the, for this case, the lower bands, right? For shorters, they'll short and then they'll try to take profit when the prices touches the lower band, take profit as a profit target. Right, so this level. So basically, just to recap, right? So traders who trade the trend trading market with Bollinger Bands, right? The first step for them is to determine the existing trend, which is the prevailing trend. So before that, you see that market fell on a downtrend. Right, market. What's a downtrend? The downtrend forms when there's a series of low and low highs, right? So this is a downtrend. Market fell, recovers, fell, and then recovered and fall again. Right, so this is a downtrend. So once the trader is very confident the downtrend will continue to continue to fall, they will apply the upper band strategy to find entry levels. So as you can see there on the high side, the traders identify 4 points whereby they can take a short positions. Right, so this is right, and then subsequently they can use the lower band for this case as the profit target to take the exit point. Right, so for traders, right, this is how they use this trend trading strategy with the Bollinger Bands to trade the downtrend. So as you can recall in the previous slide whereby I introduced the Bollinger Band, the middle line of the Bollinger Band is a very simple 20 period moving averages, right? So this is also known as the mean of the Bollinger Bands. So in a very strong trending market, the 20 period moving averages can act as an area of value. So instead of high bands, you can see here in this chart itself, right? These are the areas, right? These 5 points are possible areas of value whereby traders can consider to take short positions, right? Because on the previous slide, right, the candlesticks touches the upper band and then the trader uses that as an entry price. But in this case, because the downtrend is very strong, right, stronger compared to the previous slide, right, you can see that the candlestick did not touches the upper band only when the trend reverses on the bottom part of the screen. But this green candlestick signal that the downtrend has continued to stop. Right, the downtrend has stopped, and this uptrend may be the start of a new uptrend. So the trend may reverse with this green candlestick signal that trend is up. So for this case, this is a slight variation from the previous strategy itself. Right, the trader can use the 20 period moving averages as a possible short entry. So these 5 arrows identify the possible area whereby traders can take short positions. Okay, so this is the price bouncing out the 20 period moving averages, and this offers some good opportunities where traders can consider to take advantage of the downtrend for this case. Okay, so just a slight variation from the previous slide. So just a recap. Basically, when the candlesticks, you can see the price action is below the upper band and it trades between the moving averages and the lower band, it's telling a trader that the trend is strong on the downside, right? Trend strong on the downside. Okay, next I'll touch on the second market conditions. So what happens when the market is not trending, and how do traders apply the Bollinger Band? So on this chart, you see that the market is on a sideways market, right? This strategy is quite straightforward, right? The market will squeeze, right? The sideways market squeezes, right? Because of low volatility, the candlestick will trade between the upper band and lower band quite frequently. So traders can continue to buy low, sell high, buy low, right? With stop loss definitely, right? So only when market trends, you can see that market changes from sideways trends and the prices fell. Right, when the prices fall, in this case, it's a very strong downtrend. It's because the price action is riding on the lower band. You can see the price is very close, sticks very close to the lower band. So in this case, this is a very strong downtrend. And trader, if you can turn from a range bound market and turn short, right? So they definitely put stop loss if you are doing range bound market, and when the market is falling on the downside, they can use the upper band as a possible area whereby they can place their stop loss orders. Right. So from sideways markets to trending, and then market turns sideways again. So you can see that again, the Bollinger Band performed very remarkably well because it highlights to trader the volatility of the market. So you can see initially when there's a small downtrend, right, the Bollinger Band is volatile. The bands expansion widen, and then when it contracts sideways, there's a contraction on the low volatility of the market, and then market volatility went up again as the Bollinger Band expands,
and then contracts again in the sideways market. You can see that the price action stuck between the Bollinger Band in a more frequent trading opportunities. Right, so for traders who uses this range bound trading strategy, look for breakout on the lower upper part, right? Then you try to trade close to the price action when it reaches the lower band or upper band. So for lower band, you try to buy low and then sell high, and the upper band you take profit, and then on the high side you sell high and then buy low on the downside. Okay, so this is a very straightforward range bound trading using the Bollinger Band. Right, okay, so as you all know, there are probably a lot, if not different variation to Bollinger Band trading strategies involving possibly hundreds of different combinations. So besides the trend and range bound trading strategy, which I just mentioned in the previous slide, right, so due to time constraint, I'll cover one more Bollinger Band trading strategy tonight, which is the M top and W bottom Bollinger Band trading, right, combining with this Bollinger Band. So combining this Bollinger Band with M top and W bottom, right, it gives traders a more in-depth and focus to the trading analysis. So in short, this is what I call the BMW trading, right? So this is the Bollinger Band M top and W bottom trading strategy. Okay, so on this slide, I'd just like to introduce to your traders how you can determine the W bottom price pattern. All right, so for those who are familiar with chart pattern, yes, the other name for this W bottom is called the double bottom. Right, so let's learn how this to identify the W bottom pattern looks like. So bear in mind that this W bottom is a bullish signal. Right, so that means when the traders see the signal, the prices in the near future, you anticipate the price will rise. Right, so prices, as you can see from this chart itself, the prices fell with this long red candlestick. Market is on a downtrend. You can see that market fall, recover, fall, recover. So it is market fall, low, 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 high, low, 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 high. So it's a downtrend, right, with a very strong basis to go lower. Then in this case, there's a W that's formed, right? This is a W bottom. Okay, so you can see that this formation itself looks like a letter W, right? So this is what we call the W bottom, because subsequently prices recover, right? How do you know if prices recover? Because there's a series of high highs and high lows, right? Prices rise higher, pull back, rise higher, pull back, rise higher. Okay, so this market fell, market turned from bearish to bullish, right? From market pullback into a market rally. Then in between here, you can see there's a price bottom that's formed. So the basic form of this W bottom includes two swing lows, right? So usually they are around the same area, the same price areas. You can see that the low here and this low, they are around the same zone and or the same area here, right? So this first bottom followed by the second bottom area here. So you can take a look at this chart. This is your what you call the W bottom or double bottom with two swing lows around the same price. And this is how it looks like without the Bollinger Band indicator. Okay, so the next slide. So in this slide, we're adding the Bollinger Band, and you see that how it looks like. So just pay close attention to how this will turn out to be. Okay, so prices fell, right? So this is a line chart, right? Instead of the candlestick, which I usually use, I just like to show you the basic formation of W so that you can see in the clear form what a W looks like. So in this case, prices fell from a downtrend, and then this is a very simple W, right? It's not a very full-blown W, but you can see that it's basically it resembles a W bottom here. Okay, so this is a W, right? So the first step for traders is to find the W bottom in the Bollinger Band. So the first step, like I mentioned, is to find this first lower swing, right? So I just fell into this low here, and preferably it breaks above the lower band, right? So when it breaks the lower band, that means the volume, the sellers have already caught up with the volatility expansion. Okay, so that subsequently, the next step is that the prices will try to rally up. So usually you try to go higher and approaches the middle moving averages, and then they fail to go higher, and the prices fail to form the second low. Okay, so this is the second low over here. You can see here where my mouse is. Okay, so this is the price action that forms a second low of the W, and then prices rally up again, and then breaks above the moving averages, and it goes higher. Okay, so this is the first swing low here. Swing low, it breaks below the Bollinger Band. This is a very good signal that prices may have reached bottom, and subsequently the second low. But this trades the second low preferably is within the lower band, right? So this is the second condition for this. Then subsequently the prices rally, and then they cross above the moving averages, and prices continue to rise. Okay. Right, so this is the W bottom formations, right? So it's confirmed, right? This W is confirmed, and prices rally goes above the moving averages, and prices trend higher, continue on the uptrend. Right, it breaks above the, it could break above the moving averages and continue to break above the upper band, and prices rally up to go up higher. Right, so let's use back the previous example, right, just to explore the basic concept behind the bubble bottom or W bottom setup. Right, so you can see now I include the candlestick here. Right, so initially it is the line chart, right? So the line chart is above, and then the candlestick below. Okay, so you can see that if you use the candlestick, it may not be that obvious to find the W, right? You see where my mouse is. This is your W. But if you look at candlestick, right, just look like maybe just a range bound market, and it's not that obvious. So just to highlight to you how to find the W formation. So for you see that right, these two charts shows the same market, right, but with different levels of detail, right? The detail will just to show you the W formation. Okay, so allows you to just to compare the comparison, right, with this analysis. So with this line chart, right, the prices fell right again, and then formed the first low, and rebounded, and then formed the second low. Right, so this is a powerful sell down, right? The bearish thrust. It ended when it goes below the lower band, and then prices try to recover, and then fell again. So the second low itself here is right, it's within the lower band of the Bollinger Band, right? So it stay within this band. So this is a very strong signal that the seller has stopped selling, and then the buyers are coming to support the market. Okay. So for traders, how they find the possible entry price is highlighted by this three circle here. So these are the possible entry level by this green candlestick, right? The second candlestick, and then this doji over here, or hammer, hanging man, right? So this is how traders find the entry level for traders to enter into this kind of Bollinger Band trading. Okay, so for stop loss wise, trader can use the lower band as a level whereby they can place a trading stop, right? So just to take note that trader can tighten the stop loss when market take off, so you don't have to, fix a level that's rigid. Right, so market is dynamic, so you can adjust the stop loss to lock in the profit when market rises in your favor. Okay, so this is W trading, right? So right, for those who are more observant and more keen, you can see another W within a W. Okay, so I'm not sure whether if you can see it, but just for time's sake, I'm going to tell you that there's a big W here. Okay, so you can see that this is a big W. So the small W identified is just for very short-term trading, followed by this big W. Right, so this is the small W followed by the big W. Okay, right. So okay, just to go through a simple example. So this is the example for trading. All right, so first step is to find the W. Right, prices break low. Right, so after that, prices try to rally. Right, goes to test the moving averages, and then after that, it's failed, and then tested the lower band, and then subsequently the prices rally up. So these are the possible entry breakout level that trader can look for to enter long, and subsequently the prices rally up to to on a higher price on the volatile market. So this is the W bottom trading strategies. Okay, so let's just go to two simple examples, right? Just to get yourself familiarized how to apply these W bottom formations. All right, so the first step again, find the W bottom. All right, so this is the W bottom. You can see that this is a very straightforward W. All right, prices fell, it breaks below the lower Bollinger Band and then recover, breaks above the moving averages and tested the higher band, and then prices fell again. So this is your second bottom. Okay, subsequently, these are the levels that traders can consider to enter long, and then the prices rally up. Right, it's a volatile market. You can see here, right, prices went up on the higher high, higher low positions. Okay, so these are the steps that trader can use to maximize or take advantage of the volatile market using W bottom Bollinger Bands. Okay, so so next I just touch on the more fine time frame, right? W bottom again. Okay, for this case, breakout, and then volatile market. Okay, so these are the steps. So just recap, 4 steps. Find the W bottom, right? Prices fell, recovers, fell, and then subsequently trader will find identify the entry levels. First, the breakout on the moving edges or the higher Bollinger Bands are signals that trader can consider to take a positions. Subsequently, prices rally, and they can use the lower Bollinger Band as the stop loss for traders to put in your stop loss orders. Okay, right. So here's a recap of what you have learned today. Conclusion. So basically, Bollinger Bands reflect the direction of the market, right, with the moving averages, 20-period moving averages, and volatility of the higher and lower bands. And traders can use this to determine prices at relative high or low, right? So basically, their point is that Bollinger Bands should contain about 90% of your price action. So when you move outside this band, it's very significant. So traders can act appropriately and apply the strategy to take advantages of this price anomaly. And technically, prices are relative high at the upper band, and prices are considered cheap on the lower band or discount. Right? So when the prices are at higher band, they consider premium, and the lower band they consider cheap. Right. So one more point is that, just to conclude, Bollinger Bands are not meant to be used as a standalone tool. So traders to combine with other trend analysis or other indicators for confirmation. And last but not least, always use a stop loss for trading, right? So to manage your risk without just to buffer the volatility of the market. Okay, right. So as you all know, I'm the account executive with Phillip Futures, and these are some of the personal service that I provide to my client. And should you engage me as your account manager, these are the services that you expect to receive from me. So I'll help you to strategize and develop customized trading plan for those who are beginners or new traders. And you also receive SMS or WhatsApp or telegrams about market updates for active traders. And if you're totally new, can we coach you to use the MT5? And for new traders, we help you to conduct these CFD reviews on CFD futures and Forex. Okay, and if you're already busy working, have you execute and monitor positions. So for new funded account that's opened by the 5th of March 2021, right, you will receive an intensive one-to-one coaching session on the advanced Bollinger Band trading strategies upon the new account activation by Zoom. So in this new advanced Bollinger Band trading, you include the MTOP trading strategy, which is not covered tonight because of time constraint, and also teach you how to identify and trade other more sophisticated advanced Bollinger Band trading pattern. Right, so do remember to scan the QR code and sign up for this account at the end of this session. Right, so for interested trader to receive this free trading, right, open and fund a new account and open by this 5th of March 2021. Okay. So due to time constraint, I'll first skip through to the Q&A session. And okay, so I'll go to the Q&A session. So this is the MT5 account. So do scan the MT5 code, and if you got any other question that you think of later in the night, you can drop me an email. And so this my info, if you have this my info with the SingPass, right, it can reduce your sign up time by more than 50%. So just scan this and sign it with your my info with the SingPass. We can apply it for the MT5 account live. Just remember to prepare all this necessary document on hand, your bank statement, your supporting document for residential address, your supporting document for mailing address, if your address is different from the residential address. So all the documents has to be at least 3 months from the day you apply, right? 3 months away from the day you apply. Okay, so this is the simple right online application using my info. Okay, so these are the QR codes. Right, remember to scan to open accounts to receive the free trading. Right, so I'll go through the Q&A session. So there's a few questions I'll just go through with you. Okay, let me check. The first question is, how do we specifically use Bollinger Band to decide at what price to buy or sell? Okay, that's a very good question. So again, before I decide where to buy or sell, I need to know what is the market doing, what's the market condition, whether trending or is it ranging, which I covered in the previous slide. Then from there, you determine whether you want to take position on the using the higher band or the lower band. Okay, so this will cover in the advanced Bollinger Band trading strategies. So basically, traders will look for confirmation candlestick, like green candlestick, which I showed to you in the previous slide in the example. Right, so all this will be covered in the advanced trading one-to-one coaching. Okay, so which time frame is best for trading Bollinger Band? Okay, this is another question. Which time frame is best for trading Bollinger Band? Again, this depends on the individual trader. Okay, Bollinger Band is the versatility of the Bollinger Band is that you can use it for different time frame. Could be as low as 5 minutes, right? Or if you're doing intraday, 5 minutes, 15 minutes. But if you're doing more long term like swing trading, then you can use the hourly chart or the daily chart. So again, depends on what time frame you're doing. Scalping, then could be as low as 1 minute. But of course, if you're trading a very minute, kind of minuscule time frame, then the indicator will give you a lot of these signals, and you end up following too many signals. Okay, so it depends on the trading strategy of the trader. Okay, so the third question is, how do we specifically use Bollinger Band to decide what price to buy and sell? Okay, this is the same question. Okay, third question is, how can you confirm transition between sideways to trending market? Okay, this is very good question. If you'll be following my presentation proper, Bollinger Band, the purpose of Bollinger Band is to measure the volatility of the market. Okay, so when the market is in a low volatility or in a quiet market, right, the candlestick will trade within the upper and lower band, and they will congest, or they trade in a very close space, tight space. You can see that I showed in the previous slide. So in this case, market is in the low trend. So in low volatility market will behave in the sideways market in this behavior. And when in the trending market, the Bollinger Band will expand, right? There's a big, especially let's say in the uptrend, then the candlesticks will break above the upper band on the trending market, and then subsequently prices will rise higher, okay, and continue to rise. So when that rise, there's this phenomenon called riding the band, right? It means the candlestick will stick onto the upper band, and then you continue to rise higher. Okay, so how we confirm is that maybe on the initial part may not be that clear on the breakout. So traders will look out for green candlestick that's long and strong, and maybe the breakout of the upper band. Okay, one last question. Can we add confirmation indicator like stochastic during the Bollinger Band W pattern to find perfect entry? Okay, so I'm not sure about perfect entry, but this is a very good combination, right? Because I myself do use stochastic. So stochastic itself will give a overbought and oversold definition to the market conditions. So for this case, it's kind of supplement and complement the Bollinger Band volatility. So with that W bottom, right, this stochastic also will form a W form, right? W formation that may act as a possible just to reconfirm the entry level for this double W bottom pattern. So this is a very good combination indicators that traders can consider to use, right? Bollinger Band plus W pattern plus this stochastic. Okay, this is a good question. Okay, and let me check. This is right. Okay, this is one more question. Last question of the night. Can you comment on the double Bollinger Band and how to use this? Okay, this double Bollinger Band is more at the advanced level. Okay, advanced level, because what I'm touching on tonight is just using a single Bollinger Band. But this is a good question just to briefly touch on. It depends on how you want to measure volatility on a short time frame and longer time frame. So double Bollinger Band, maybe you add in two Bollinger. One is the 20 period moving averages, and then one with the 40 period moving averages. So they both serve two functions, right? So the one default is maybe 20 period moving average plus 2 standard deviation, and the other one you maybe use 20 period moving average, but is 4 standard deviation. So they both maybe measure the different level of volatility in the market, right? In a low volatility market and in a high volatility. So in a higher volatility market, right, the Bollinger Band may measure differently when the price action in a downtrend or an uptrend. So it will give a different signal, right, compared to just a single Bollinger Band, right? So basically, this can sound a bit confusing, I know. So if you want, you can sign up for the advanced training course and can touch on this double Bollinger Band because it's beyond the scope of tonight's session. Okay, so so this is, I think I'm coming near to the end of my seminar. So is there any other last question? Okay, so just maybe to conclude, one last question is that because I usually receive this question is which is better, MT4 or MT5 or something like that. Okay, so the main thing about MT5 is that it gives more time frame to traders, right? There's more flexibility for trader to choose different time frame to as low as 1 minute, so you can customize the different time frame. You could look at 1 hour chart, 2 hour chart, 3 hour chart, 4 hour chart, or maybe 33 minute or 45 minutes. Sometimes you can adjust, and there are 6 different types of orders, pending orders that you can submit. Okay, so there's more versatility to MT5. And it comes with the market depth, so you can look at the orders that's in place and the market depth, whereas the MT4, it doesn't come with this function. And with that, it comes with this programming code, whereby traders, you can program your own AI or your robo-advisor to execute trade on your behalf, right, with this MQL5. Okay, so MQL5 is more advanced compared to MQL4. So main thing about this MQL5, you can apply the same code on MT4, whereas you can't do that for MT4 to MT5. You need to reprogram everything again. And of course, lastly, you have more product that's available on T5, right? You have Forex, you got CFD, you got stocks, and maybe in the near future, we will introduce futures contract into MT5. So it's more versatile and it's more stable and it's more advanced. Okay, so and it comes with hedging function. So with hedging, you can buy and sell the same product, the same price, right? If you want to hedge your positions, right, with this MT5 CFD or Forex trading. Okay, so this is the last questions of the night. Okay, so okay, so the apologize that I'm not able to do the MT5 demonstration tonight, but if you really want to know about the MT5 demonstration, you can sign up for the demo, right? Then you can call me, and then we can arrange a time and do a one-to-one, right? So with that, you can sign up a live account and fund account, then we can do this advanced trading, Bollinger Band trading. So with that, this is all the time we have for tonight. So again, I want to thank you so much for being a wonderful and awesome audience for tonight's webinar. So a link for this recording for this webinar will be available, right, in our follow-up email tomorrow. So our staff will send you this email, and then you just drop a link. So if you have any query or any question on tonight's webinar, you can, and you'd like to get started, so simply reply to this email and we'll get in touch with you. So once again, this is Stephen Ong signing off, and thank you very much, and happy trading and happy New Year.